Today we are discussing about banking and insurance. Banking is becoming very important in economic situations. Why? Because a bank means it becoming a financial institutions and an intermediator. Why we call it becoming a financial institutions? The bank it become mobilizing for the purpose of utilizations to the public. Means bank cannot invest own money in an activity. It's only acting as an intermediary. Intermediary means ಹಾಗಂದ್ರೆ ಏನು, ದಳ್ಳಾಳಿಗಳು ಅಂತ ಕರಿತೀವಿ. ಅವ್ರು ಏನು ಮಾಡುತ್ತೆ, one hand it will be mobilizing means collection from a money from the customers. ಯಾರ ಹತ್ರ ಅತಿ ಹೆಚ್ಚು ಅಮೌಂಟ್ ಇರುತ್ತೋ ಅವರಿಂದ ಅಮೌಂಟನ್ನ ಕಲೆಕ್ಷನ್ಸ್ ಮಾಡಿ, ಯಾರಿಗೆ ರಿಕ್ವೈರ್ಮೆಂಟ್ಸ್ ಮೀನ್ಸ್ ನೀಡ್ಸ್ ಇರುತ್ತೋ ಅವರಿಗೆ ಅದೇನು ಮಾಡುತ್ತೆ, ಸ್ಪೆಂಡ್ ಮಾಡುತ್ತೆ. ದಟ್ ಬಿಕಮ್ ಬ್ಯಾಂಕ್ ಅಂತ ಕರಿತೀವಿ. Today bank is very important. Why? Because each and every economic activities it become run through a banking system. For example, we are transferring money from one country to another countries. We are transferring transactions through in a banking activities. That's why it will playing a important roles in a economic system. The origin of banking, the word was derived from Latin words banco and or from a French word banque. Both the meaning of activity it become bench or a money exchange table. The meaning of bank, a bank is a financial institutions which deals in money and credit. Those bank is an intermediary which handle other people monies both for their advantages and to its own profit. But bank is not merely a trade in money but also an important manufacturing of money. In other words, bank is a factory of credit. I'm already said a bank it is not invest any own money in an activity. It's only an acting as an intermediary. Means it mobilizing a money from the public for the purpose of investing in the public activities. That's why you called a bank it become a factory of a money anta kariti. Next, the definitions. According to Banking Regulations Act 1949 defines bank as accepting for the purpose of lending or investing of deposit money from the public repayable on demands or otherwise and withdrawable by check, draft, order and otherwise. According to a Banking Regulations Act, bank is not only a mobilizing of a money from the public, even though bank is also providing different ways of services to the public. According to a banking regulation, accepting for the purpose of lending. Why the bank can accepting a public money? Because of lending. Because of lending means it can channelizing the concept of activity in the form of investment of deposit a money from the public. Means money ಏನು ಪಬ್ಲಿಕ್ ಇಂದ ಕಲೆಕ್ಷನ್ಸ್ ಅನ್ನ ಮಾಡುತ್ತೋ ಆ ಒಂದು ಕಲೆಕ್ಷನ್ಸ್ ಆಫ್ ಮನಿಯನ್ನು ಅದೇನು ಮಾಡುತ್ತೆ, ಪಬ್ಲಿಕ್ಗೆ ಇನ್ವೆಸ್ಟ್ ಮಾಡುತ್ತೆ. ನಾಟ್ ಓನ್ಲಿ ಇನ್ವೆಸ್ಟಿಂಗ್ ಇಟ್ ರೀಪೇಬಲ್. When the bank holder can demand our money, it can repayable on demand or otherwise and withdrawable by check, draft, order otherwise. ಯಾವಾಗ ಕಸ್ಟಮರ್ಸು ತಮ್ಮ ಮನಿಯನ್ನು ರಿಟರ್ನ್ ಬ್ಯಾಕ್ ಕೇಳ್ತಾರೋ ಆವಾಗ ಅದೇನು ಮಾಡಬೇಕು, ಆ ದುಡ್ಡನ್ನು ಚೆಕ್ಕಲ್ಲಿ ಆರ್ಡರಲ್ಲಿ ಅಥವಾ ಓವರ್ ಡ್ರಾಫ್ಟಲ್ಲಿ ಅದನ್ನು ರೀಪೇಯಬಲ್ ಮಾಡಬೇಕು ಅಂತ ಹೇಳುತ್ತೆ. ಅಕಾರ್ಡಿಂಗ್ ಟು Kinley defines a bank is an establishment which makes to individuals such advances of money as may be required and to which individual entrust money when not required by them for use. Means ಯಾರ ಹತ್ರ ಮನಿ ಅತಿ ಹೆಚ್ಚು ಇರುತ್ತೋ ಆವಾಗ ಅವ್ರ ಹತ್ರ ಕಲೆಕ್ಷನ್ಸ್ ಮಾಡಿಕೊಂಡು ಅದನ್ನು ಅಡ್ವಾನ್ಸ್ ಅಂತಕ್ಕಂಥ ಒಂದು ಸಿಸ್ಟಮ್ಸಲ್ಲಿ ಅದನ್ನು ರಿಸೀವ್ ಮಾಡಿ ದೆನ್ ಯಾರಿಗೆ ರಿಕ್ವೈರ್ಮೆಂಟ್ಸ್ ಇರುತ್ತೋ ಯಾರಿಗೆ ನೀಡ್ಸ್ ಇರುತ್ತೋ ಅವರಿಗೆ ಅದನ್ನು ಏನು ಮಾಡಬೇಕು, ಕೊಡಬೇಕು ಅಂತ ಹೇಳ್ತಾನೆ. ನೆಕ್ಸ್ಟು ಫೀಚರ್ಸ್ ಆಫ್ ಬ್ಯಾಂಕಿಂಗ್. ಫಸ್ಟ್ ಒನ್, ಡೀಲಿಂಗ್ ಇನ್ ಮನಿ. Means the bank can accepting deposit from the public and advancing them as a loan to the need people. The deposit may be of different types of accounts like fixed accounts, savings account, etc. The deposit are accepted on various terms and conditions. That is the first features of bank. Next, deposit must be withdrawable. Means the deposit made by the public can be withdrawable by check, draft, orders, otherwise. That means the bank issues and pay checks. The deposits are useful, withdrawable on demand. When the people can demand our withdrawable, that time the bank it become repayable to the customers. The third features, it become dealing with credits. Dealing with credit means the banks or the institutions that can be creating a credit. That means creation of additional money for lending those the creation of credit. It is unique features of banking. Means bank can given a loan to the public. Those who are needed for a money, the time it will be given a opportunity for creation of credit. Then commercial in nature. Since all the banking activities of the commercial banks are carried on with the aim of making profits, it is regarded as a commercial institutions. Means bank can mobilizing a deposit from the customers in a small system and the same money it will be a more interest. In the system of activity, it become considered as a commercial system. Then nature of agent. Means already I told a bank is become intermediary. Intermediary means it like a agent activities. Means somewhere it will be mobilizing for the purpose of lending to the another persons. Means it like a agent activities. Who is an agent? An agent, one who work on behalf of a principal. In the same way, the agent can receiving a commission from the principal. The same way, the bank is also a mobilizing a money from the public. It will be given some interest to the customers. And the same concept of money, it will be invested in the another hands. It can receiving some interest from the lenders. The way the bank it become a nature of agent. Then next, evolutions and development of banking. The banking sector's development can be divided into three spaces. Space number one, the early space which from 1970 to 1969. Space number two, the nationalization space which from 1969 to 1991. Space number three, the liberalization or the banking sector reforms space which begins in means till now. The history of banking in India. The history of banking in India divided into two parts. Pre-independence period 1786 to 1947. That post-independent period divided into three space: pre-nationalization period 1947 to 1969, the post-nationalization period means 1969 to 1991, and liberalization period 1991 onwards means till now. The pre-independence period 1786 to 1947. The first Bank of India was the Bank of Hindustan. established in 1970 and located in the Indian capital Kolkata. However, this bank failed to work and ceased to operations in 1832. During the pre-independence period, over 600 banks had been registered in the country, but only one few managed to survival. The following path: Bank of Hindustan, various other banks were established in India. The General Bank of India 1786 to 1791, the Bank of Bengal 1809, the Bank of Bombay 1840, the Bank of Madras 1843. During the British rules in India, the East India Company established three banks: the Bank of Bengal, Bank of Bombay and Bank of Madras, and called them the Presidential Bank. These three banks were later merged into one single bank in 1921, which was called Imperial Bank of India. Next, the Imperial Bank of India was later nationalized in 1955 and was named the State Bank of India, which is currently the largest public sector bank in India. The given below is the list of other banks which are established during the pre-independence period. Allahabad Bank 1865, Punjab National Bank 1894, Bank of India 1906, Central Bank of India 1911, Canara Bank 1906, Bank of Baroda 1908. The reasons as to where many major banks failed to survival during the pre-independence period, the following conclusions can be drawn. Indian accounting holders had become fraud, lack of machines and technologies, human errors and time consuming, fewer facilities, lack of proper management skills. These are all the things the pre-independence bank, it will be failure in India. The following the pre-independence period was the post-independence period, which observed some significant changes, some important changes in the banking industries scenario, and as till date developed a lot. A post-independent period 1947 to 1991. At the time when India got independence, all major banks of country were laid down privately, which was a cause of concern as a people belonging to rural area were still dependent on money lenders of financial assistance. With an aim to solve this problem, the government decided to nationalize the banks. These banks were nationalized under the Banking Regulations Act of 1949, whereas the Reserve Bank of India was nationalized in 1949. The following, it was the formation of State Bank of India in 1955, and other 14 banks were nationalized between the time durations of 1961 to 1991. These were banks whose national deposits were more than 50 crores. Gives below the list of these 14 banks nationalized in 1949: Allahabad Bank, Bank of India, Bank of Baroda, Bank of Maharashtra, Central Bank of India, Canara Bank, Dena Bank, Indian Overseas Bank, Indian Bank, Punjab National Bank, Syndicate Bank and Union Bank of India and United Bank. In the year of 1980, the another 6 banks were nationalized, taking the number of to 20 banks. These banks including Andhra Bank, Corporation Bank, New Bank of India, Oriental Bank of Commerce, Punjab and Syndicate Bank, Vijaya Bank. Apart from above mentioned 20 banks, there were 7 subsidiaries of SBI which were nationalized in 1959. State Bank of Patiala, State Bank of Hyderabad, State Bank of Jaipur, State Bank of Mysore, State Bank of Travancore, State Bank of Indore. All these banks were later merged with State Bank of India in 2017, except for the State Bank of was merged in 2008 and State Bank of Indore which was merged in 2010. Next, the role of bank in Indian economic system. Point number 1, promote several habits of the people. Means bank, it can creating a habits to the Indian people. Bank can attract depositors by introducing attractive deposit scheme and providing rewards or returns in the form of interest. Bank providing different kinds of deposit scheme to its customer. It enables to create banking habits or saving habits among the people. Means bank, the nature of activity, it become encouraging a public deposits. Means the bank can open a different kinds of accounts. It can given a more number of interest and rewards and returns and extraordinary facilities. Means online facilities and net banking facilities, a different varieties of transactions and foreign transaction system. The way the bank can encouraging to open an account habits in India. It can opening an account, it become mobilizing a more number of deposit from the public. It become mobilizing a more number of deposit. It will be enhancing our deposit system. Point number 2, the capital formations and promote industries. The bank, it can mobilizing a public money. It's nothing but it can formation of capital. A capital is one of the most important part of any business or industries. It is the lifeblood of business. Banks or increases capital formations by collecting deposit from the depositors and convert this deposit into loan advances to industries. Means bank can mobilizing a public deposit for the purpose of lending, means investing, means it will be formation of capital, it will be supply of capital to the industries, it will be supply of capital to the industries. Means it can encouraging an industries, it can developing an industries, a development of industries, it can developing a more number of employment opportunity. It can developing more number of employment opportunities. It's automatically increasing a purchasing power of the people. Then smooth of trading and commerce functions. In this modern era, the trade or commerce play a important between any countries. So the money transactions should be user friendly. A modern bank helps its customers to spend funds to the anywhere and receives funds from anywhere of the world. A bank well developed banking system provides various attractive services like mobile banking, internet banking, debit card, credit card, etc. This kind of services fast and smooth the transactions, so bank helps to developing trade and commerce. Means a bank can run a smooth functioning of trade and commerce functions. A trade and commerce functions means we are transactions, we are purchasing any system of activities through in a transactions of net banking. And net banking means we are using a new system of debit card, credit cards, and different varieties of cards. That concept of activities, it will be encouraging and a purchasing, it will be creating a purchasing habits of the public. The next point, a greater employment opportunities. The bank can creating a greater employment opportunities. How it will be creating greater employment opportunities? The bank can mobilizing funds, it will be channelizing to the public, means in the form of services, in the form of productive activities, in the form of agricultural activities. It will channelizing all ways of economic activities in an economic system. It will be a channelizing a more fund, a capital requirements to the industries. That industries, it will be creating a transactions, like it will be developing a industrial activities. It will be developing an industrial activities, it's automatically development of marketing activities. It will be automatically development of marketing activities, it will be creating more number of employment opportunities. It will be creating more number of employment opportunities. That concept of industries, it will be pay for salary to an employee. That employee, it will be a purchasing something in the economic situations. It will be buy something in economic situations. It will be developing GDP, gross domestic product. It will be developing GDP. It pay for more number of tax. It pay for more number of tax. It's automatically development of per capita income of the nations. The next is supporting agricultural developments. Agricultural sector is one of the internal part of any economy. Food self-sufficiency is the major challenges and goal of any country. A modern bank promote agricultural sector by promoting loans and advances with low interest rate compared to other loans and advances scheme. Means the bank can promoting agricultural activities, means it providing agricultural loans to the farmer. It will providing a low interest of agricultural loan to the farmer. The farmer can encouraging a agricultural activities. It will be a growing a more number of craft, that will be encouraging a food safety system in Indian economic situations. Then next point, applying of monetary policy. A monetary policy is an important policy of any government. The major aim of monetary policy is stabilizing financial system of the country from the dangerous inflation and deflation and crisis, etc. The bank, even RBI, the Reserve Bank of India, it become a central bank of India. That Reserve Bank of India, it become a responsible authority to creating a monetary policy in India. That's why even though all banks can following all the rules and regulations given by Apex Bank, means Central Bank of India. That's why the proper system of monetary policy, it will be implemented through subordinate banks like schedules and non-schedules and developmental banks. That's why even though the concept of monetary policy, it will be controlling inflations and deflations, means increasing the price of products, that means inflations, decreasing the price of products, that become deflations. Even though the concept of banking can maintain the inflation and deflation situations in economic situations. Next, balanced development means modern banking spread its operations throughout the world in order to achieve balanced development. We can see number of big banks like Citibank, Baroda Bank, etc., which helps a country to spread banking activities in rural and semi-urban areas. With the spread of banking operations around the country helps to attain balanced development in promoting rural area. The balanced development means the modern banking system, it will be enlarging our banking activities until unless to rural and urban or semi-urban areas. It will be extending a banking activities to a rural and a semi-urban area. Even though the concept of activity, it will be developing a banking nature and banking habits in the rural area people. Even though the rural area people can open an account to doing a transactions through that particular account, the concept of activity, it will be recorded, it will be systematic, that will be an avoiding unethical practices of activities. Then next point, finance to the government. The government is acting as a promoter of industries in underdeveloped countries for which the finance is needed. For it, the bank provides a long-term credit to the government by investing their funds in the development governmental securities and short-term finance by purchasing treasury bills. It means the bank can providing a short-term, medium-term and long-term financial assistance to the government to encouraging an economic system. Then final point, utilization of resources. Even though the bank can avoiding and saving a polluted by banks are utilized to greater extent for developmental purpose of various regions in the country. It ensures utilization of resources. Means
Here 1 2 minutes time.